Good morning, everybody. It's Friday, November 1st. Welcome to a new month. 5:29 a.m. Central Time. Grain markets are higher across the board. Nice change of pace. Matt Bennett is here. Let's start off with this little bounce we've got in the soybean market.
So, soybean futures have closed higher in two consecutive sessions. The market declined ahead of the November 1st notice day as many farmers were deciding whether to price or roll their November basis contracts. A bounce on or shortly after first notice day is fairly normal. The January 25 contract was able to avoid a retest of its August low. Private groups estimate that the funds were net short about 60,000 contracts at yesterday's close.
Matthew, I'm inclined to say that this is nothing more than just a first or post first notice day bounce. The selling pressure that was associated with the couple of days prior to first notice day is now gone. So a weight has been lifted from the market. Yet I don't know that I see anything else fundamental to really push this thing to new heights from here.
No, I mean, I agree. It's pretty tough fundamentally to get to friendly. That's where I've resided for a while. I mean, clearly, if you push the downside too far, after we've been depressed for some time, I guess a guy might get nervous about getting too bearish. But at the same time, you got to give me a reason why this market might take off and go. And right now, without a really good influence out of South America with weather, and that's just not happening. Weather looks pretty solid for the time being. I do think for the WASDE report next week, probably looking at a little bit of a yield drop for the U.S. But as we go through the balance sheet on our team, it doesn't really affect the carry out a whole lot with the kind of yield reduction we're looking for.
So if they took a bushel off the national soybean yield estimate, it puts a dent in the balance sheet, but you're probably still talking what 500 million bushels. I mean, somewhere in
Yeah,
that
I mean,
neighborhood.
it's pretty tough if you're realistic about it to think that it will end up being much below that. I mean, the thing is that whereas you can maybe get a little bit excited about the pace for corn exports, yeah, beans have been good recently, but still, I mean, we're probably overstated as far as exports are concerned. I really struggle to think that the USDA will be correct as far as bean exports go. And so, right now, I mean, yeah, maybe you drop that thing just a little bit for the time being, but I think in the long haul, it's going to be tough to be under 500. But that's my
I get it,
opinion.
guys. We're drinking the haterade this morning, but I hope we're wrong, Matt. I hope there is
I really, I mean, there's no doubt about it. I mean, it's not much fun looking at
no,
no 25 at 1040. I understand people can't get super excited about stuff
no.
like that for next spring, but um, there's a lot of beans in the world. Brazil has a decent crop. You're looking at a massive amount of U.S. stocks and world stocks combined. It's just tough.
All right. I hope what we just said ages very, very poorly. What's up next?
So USDA released weekly drought monitor data yesterday. Portions of the Corn Belt received rainfall last week. However, the moisture did little to improve drought conditions. The majority of the region saw drought intensify and expand. Approximately 75% of the Corn Belt is experiencing some level of drought, up from 66% last week and up from 4% 3 months ago. The level of drought impacting corn and soybean production is the highest since 2012. The High Plains received minimal rainfall and above normal temperatures last week, and much like the Corn Belt, drought conditions expanded and intensified across the region. When we look at the percentage of U.S. areas experiencing drought, corn country 81%, soybeans 73%, winter wheat 62%, spring wheat 40%, and cattle country 62%.
I updated this chart this morning. 81% of U.S. corn areas experiencing drought, and that's D1 to D4. So like some of it's not necessarily extreme drought, but that's the highest level by this metric since 2012, which is pretty crazy. We have had some rain last 72 hours. A lot of Iowa caught some rain, Missouri, southern Minnesota, Wisconsin, eastern parts of Kansas, Oklahoma, down into the Gulf Coast to kind of zoom in on the amounts. I mean, there's some decent totals here, Matt. And there's not anything on the radar this morning, but there's more coming. Sunday is when the rains return, and that 5 to 10 offers some additional accumulation. This is a big deal for a number of reasons.
Oh, absolutely. I mean, yeah, it's been dry as a bone. There's no doubt. And if you look at that drought monitor, I know a lot of folks that are watching this will say, hey, this could have implications for next year. And I totally get that. But for right now, I mean, let's look at the river system. I mean, we need to get the tributaries with a little bit of water flow. And I mean, these draft levels have really struggled. I mean, we're at it's about as low as what we've been, this time of year. And so it's just tough to float. If you can't float a full barge to be competitive, when you're looking at, for instance, shipping beans down to the Gulf or fertilizer up. And so we need to see this rainfall fairly widespread. And I understand not everyone's done with harvest, and I sure hope that it doesn't hurt you too much there. I know it's been awfully rapid lately, so a lot of areas are getting done. But I'll tell you what, especially in the watershed areas, I think a really good soak in rain, and I'm talking 2, 3, 4 inches, might not be the end of the world.
No, I think this is going to be really good. Winter wheat country has caught and will catch some rain. HRW country in, say, western Kansas looks to still kind of, the forecast is kind of stingy with rains there in Colorado and Texas. But the forecast, is 5 to 10 could be off, and hopefully those areas do catch some rain.
U.S. soybean and corn export sales were strong last week. Net soybean sales were reported at 84 million bushels. The print was up 6% versus the previous week and up 39% from the prior 4-week average. Despite a weekly decline, net corn sales remained strong at 92 million bushels. The print was down 35% from the previous week, but up 7% from the prior 4-week average. Net wheat sales were reported at 15 million bushels. The print was down 23% from the previous week and down 14% from the prior 4-week average.
All right, Matt. So corn sales have been really good. Third best of the last 10 years. We're 40-something% ahead of last year's pace. I've been told that I shouldn't get excited about this because Mexico and other global buyers are front loading their import programs for 2 reasons. 1, to take advantage of low prices, which is normal. And 2, to get in front of any sort of geopolitical trade war-ish type thing that could happen early next year. Do you buy that, or should we get excited about this?
We have to have something to get excited about with these markets here lately. So I'm going to take it and be happy about it. But I also have to be realistic. Mexico is very likely to be front loaded. We know that. I mean, it's not just because of this year and being election year. Mexico typically buys a whole lot of corn this time of year anyway.
Yeah.
And so we do understand that those are probably going to back off somewhat. That's just kind of how it works. But at the same time, it sure looks like all the frustration that we had, and I think you and I both felt the same way early in the summer, for instance, with the USDA forecasting exports as strong as what they were. I was like, I'll believe it when I see it. But it sure looks like they were on to something. I don't know. I do think that things will back off somewhat, but at the same time, do we get to like a $2.5 billion export program? I think it's possible. I think it's in the realm of discussion now. Whereas I would have said that was ludicrous a few months ago, then I would have been wrong, and I'm glad to be wrong there. But yeah, I mean, I'll get excited about it for now. A little bit of grain of salt type situation, but I'm gonna get excited about it for now.
So there's a USDA report, I believe, a week from today. And USDA could revise its corn export forecast upward because of these sales, or they could read between the lines and say, wait a minute, we think we know what Mexico is going to import, and we think that the program is front loaded, and therefore we're going to keep our forecast unchanged, which may not sit well with some people, but that could very well happen.
Oh, absolutely. I mean, as we were putting our forecast together, the ag market team, we were thinking, what might the USDA do? It's tough to outguess them, and so usually when Reuters sends it out, as you've seen, hey, what's your guess for the USDA, and then what do you really think? It gets kind of complicated. But our team said, we kind of feel like as we were filling out our balance sheet, it's reasonable to think that there would be a 25 million bushel increase as far as the corn exports go. Whether that happens or not, I don't know. But sometimes in these reports, especially after October, you get to looking for something to change. And so, it's in my opinion, I felt like that was one area you could definitely go to for a little bit of an increase.
Okay, so corn sales are really good. Soybean sales, not so much. 4th worst of the last 10 years. The only years that were worse were last year and then your 2 trade war years, 2018 and 2019. So we've seen frequent flash sales, but the amounts haven't really been there. Chinese purchases, I think, are behind where they would typically be. And if Brazil has this monster crop, I mean, we just may underperform.
Yeah, I'm afraid of that. The thing is, yeah, China's been in. A lot of people feel like China wants to get in ahead of the election. I mean, that's been discussed quite a bit, just like Mexico, as we just talked about. How much there is to that remains to be seen. But at the same time, Brazil is planting a monster crop. As far as acreage is concerned, we don't know what Mother Nature might do. But as far as the start, it sure looks like they're going to be in position that with normal weather, they should have a massive bean crop. And so if that's the case, you can't really expect that after, maybe mid-February, we're going to see a lot, of the export sales or inspections, if you will, shipments. I don't think that a lot of those are going to be heading our way. I mean, I'm afraid that we're going to see that program dry up like we do many times, especially when they have a bigger crop.
Wheat sales are about average for this time of year, but I think they're running ahead of the pace needed to hit USDA projections. So perhaps a bright spot there, although we haven't really seen the market react to it a whole lot. What's up next?
Rabobank is forecasting an increase in Brazilian soybean acres. Compared to the previous season, planted acres are expected to increase 1.5% to 116 million acres. Earlier this month, CONAB, Brazil's version of USDA, projected a 2.8% increase in acres. That's the smallest year-over-year growth in 6 years. Rabobank is also estimating the Brazilian crop to be record large at 167 million metric tons, an increase of 9.2% compared to last season. Despite dry conditions inhibiting planting, Rabobank has yet to reduce its crop production estimate. The Brazilian corn crop is slated to reach 125 million metric tons, a 2.5% increase from last season.
All the estimates are still indicating record production. It's very early. But everybody out there is in the mid to upper 160s, I think, for the most part. USDA is at 169. Maybe they're slightly high, but you're kind of splitting hairs there. The weather has improved drastically. You've seen rain in Brazil. There's more in the forecast. The next 10 days looks really good. You can look at this two different ways. This is just absolute rainfall, 2-3 inches expected across almost all of Brazilian soybean country. And if you look at the forecast versus normal, you're going to be normal to above normal in most of your key soybean growing areas. So there's just no problems, nothing to get worried here about, Matt.
Yeah, absolutely. I mean, that's the thing that is, if you're trying to get bullish beans, it's pretty tough to do it this time of year without some sort of weather influence out of South America, especially after we grew a big crop. Now, I know some will listen to this and say, "Hey, I still think you guys are too high on the U.S. crop." And I'll tell you, Joe, we took our yield from 53.1 down to 52.3, 0.8 bushels. I know some people are going a bushel and a half. I don't know that the USDA takes that big of a bite here, but I think regardless, it's a big enough crop that combined with what is perceived to be pretty normal conditions out of South America, and with Brazil even at 160 or better, you're still looking at a pretty large increase in world stocks over the course of these two marketing years. I always like to look at that. USDA said 100.3 or 100.4 at the start of last marketing year, and then this year they're forecasting 134. I mean, that's just a big increase. And so if Brazil has a normal sized crop, you got to have a hard time getting too bullish here.
Hey, how mad are people going to be when USDA raises the soybean yield number next Friday?
I don't think they will.
If you don't think they will.
But they would be mad. I agree with you.
People would be mad.
I'd probably bet a cold one on that one, maybe, but I don't know.
All right. What's next?
The USDA's Argentina office has pegged the country's soybean crop at 52 million metric tons. The estimate is higher than USDA's forecast of 51 million metric tons. Argentina farmers are expected to plant less corn and more soybean acres this season due to concerns over stunt disease. Tight margins are also anticipated to encourage the shift to soybeans given their lower production costs. Hot and dry conditions, which are forecast to persist through the end of December, may impact the soybean crop. Argentina's soybean crush is slated to increase to 42 million metric tons due to increased production and a rise in imports.
They did catch some rain in Argentina, and it was very helpful. And now it looks like maybe it's going to be dryish for a minute, but the forecast would indicate no concern. I mean, the office in Argentina is saying they're a million higher than WASDE board officials. So again, no concern yet.
No, I don't think there's going to be a whole lot of concern there whatsoever, at least for now. I mean, the thing is, remember geographically where they're at. I think if you do get concerned, it's probably going to be after you get some sort of concern about Brazil because they're going to be running a little bit behind anyway. But yeah, I don't think there's a big issue here. If you get later in the growing season and it's dry in Argentina, we know soybean meal type rally is possible. I mean, it's something that's been a feature many times in both our careers. But, if weather's normal in Argentina and Brazil, it's going to be tough once again.
For those of you guys who are grain marketers and you've got soybeans to market, one thing that Pete Meyer and I have discussed is the shift in normal seasonal tendencies in the soybean market. It's like, I think moving forward, because Brazil has become so big, and we saw this last year, you're going to see this weather market in like November, December, maybe early January that can impact the market just as much as the U.S. Growing season does to the soybean market in, say, July and August. So like these next couple of months, if you're presented with a crop scare event in Brazil or Argentina and beans rally on that, we know the crop scare events here are typically some of your best marketing opportunities. And the same thing can be said for Brazil. Does that make sense?
No, absolutely. I mean, I've been saying that the last couple of 3 years is that, your seasonals have got to adjust whenever we were the main game in town, and we are no longer. I mean, we're not even raising the biggest crop in the world anymore whenever it comes to soybeans. So you got to understand how those seasonals will be adjusted. It's a great point.
The U.S. is a distant second now. What's next?
USDA reported a flash sale of soybean cake and meal on Thursday. U.S. exporters sold 150,000 metric tons of soybean cake and meal to unknown destinations for delivery during the current marketing year. Since the beginning of the year, exporters have sold 926,000 metric tons of soybean cake and meal for delivery during the 24-25 marketing year via flash sales.
That's great. We've seen a lot of stuff to unknown lately, I feel like. A lot of corn to unknown. I don't know how that's going to resolve itself. I'm told it's not China. I'm told none of the corn is China, but we'll see.
Yeah, I mean, we were told it was possibly Japan. I mean, I don't know. That's the rumor on the street, but unknown's been quite a customer here lately.
All right.
U.S. jobless claims have fallen to their lowest level since May. Initial claims declined by about 5% last week to 216,000. Jobless claims soared earlier this month earlier in October, when hurricanes Helene and Milton caused widespread damage in the Southeast, shutting down countless businesses. A strike at Boeing, which caused the company to initiate rolling furloughs, also contributed to the uptick in claims. During October, U.S. employers cut approximately 55,600 jobs, a decline of almost 24% from the previous month. However, year-to-date, jobless cuts are 3.7% higher than the same period last year.
On my jobless claims chart, I started with 2022 to get rid of all the COVID era noise. So this is just kind of a normal-ish print. Here's a tweet from Ben Carlson, who I follow, who is an optimist with regard to the economy, which is how you should be most of the time. People aren't. The unemployment rate is 4.1%. Inflation's 2.4. 10-year treasury is 4.3. Real GDP is at 2.8. If there's such a thing as a sweet spot for the economy, we're basically in it right now. And he's saying, hey, unemployment's still pretty low. Treasury yields running above inflation. Real growth is running above inflation. So we're in good shape. But Matt, we have this deal here where the regular Joe Public economy is very often inversely correlated to the farm economy. And that's what we've got going on right now. The farm economy, I would argue, is in the midst of a full-blown recession, while the Joe Public economy is actually probably pretty good.
Yeah, I mean, there's no question. Recession would be one way to put it. I think, Joe, if we have huge crop out of South America, and we don't get what you would say is some support, if you will, for a renewable fuels initiative type situation in the U.S. As you lose market share, the recession could deepen. I don't think this is something that will be over with quickly. Yes, low prices cure low prices at times, but at the same time, we've got plenty of stocks globally. So I think we can make a little bit of a case for corn having some life. I think just the recession is a lot due to the fact that you've got this massive and growing soybean situation as far as stocks are concerned. So I don't know. It is an inverse correlation right now. We've got to hope that this farm economy stabilizes, but it's definitely going to be a tough sledding type year once again in 25. At least the way things look right now for as far as input costs are concerned, in the association with prices.
Based on the comments that we've seen on YouTube and elsewhere over the years, it seems to me as if our viewer base is very often like bullish commodities. Commodities have to rally for some reason, and always pessimistic about the stock market, when in reality, over time, you should be the exact opposite. You should always be bullish the stock market, and you should be bearish commodities on rallies. And that's what works out over time. And people don't want to hear that.
No, they don't want to hear it at all. Now, it'll be very interesting, as you and I both know, after the election, how's that going to impact things? I mean, we could
Nobody knows.
see, we don't know, nobody knows, but there's definitely going to be some angst. We know that there might be some money flow implications that we don't know right now that could happen. We've got to hope maybe people see some value in commodities somewhere in here, but at the same time, there has to be a fundamental reason to go into certain commodities. And unfortunately, right now, I can't find that, for instance, with soybeans.
I just don't know that there's a massive surprise in the election result. I mean, it's like the polling's kind of split down the middle. I mean, maybe favors one or the other. 2016, Trump was a massive surprise, but if he wins this time, he's not. So I don't know that anything crazy has to happen. What did cattle do yesterday?
Cattle futures were mixed. Live cattle were 27 cents lower to 50 cents higher. Feeders range from 90 cents lower to unchanged. Box beef was lower yesterday. Choice lost $1.84 to end the day at 317.60. Select was 395 lower at 285.37.
Are you a cattle bull at these prices, Matthew?
I don't know about a cattle bull, but Joe, I mean, Kenzie will tell you this: the cash market is just crazy. Whether you're talking feeders, fats, but the investor, the funds are like, man, we've been buying these cattle forever. We've been long forever. At some point, there's got to be some exhaustion there if you don't see this market kind of get safely above some of these long-term resistance levels. So I'm not. It's not that I'm bearish, but you have to protect these prices, in my opinion. I see no other choice.
Outside markets on Friday, U.S. dollars up just a little bit. The stocks are higher, but they got smacked yesterday on some bad tech earnings. Bonds are off just a little bit. Gold's up $10. Crude oil's up $1.37. And the December WTI at 70.61. Have a great weekend, guys. Matt, thanks for joining us. We'll be back on Monday.